Hello guys, how do you hear me? Okay, let's begin. Today we have an interesting topic. You can see technical analysis in crypto and stock market. As I said on previous lesson, it's stock market. It's have a very big similarity between crypto market. So some analogy of these markets we can see nowadays. Okay, the main formation of technical analysis support is and resistance. So the main components of our trading are the trade of breakouts and rebounds from levels. Levels I mean support and resistance. So begin with support. So support, the price was kept above $5. You can see on this example. So what it means? Support is a level at which demand for cryptocurrency exceeds supply. The closer the share price approaches the level of support, the more buyers want to buy a cryptocurrency. This prevents the cryptocurrency from falling further. You can see for this image. Support is located at the minimum prices for a certain period of time. In the example, the stock price falls to the level of 5 and resists to 7. If the cryptocurrency price returns to the 5 level again, this level can be viewed as support, since the best is the demand for a cryptocurrency as this price stopped its fall. But yes, breakout support, as the bars didn't have enough strength, a significant level is pierced. So support levels don't always work, and with increasing pressure from sellers, like this case, breakout for the level of support may occur. In this case, the supply exceeds the demand, and the cryptocurrency price is likely to decrease as the forces of buyers have dried up and the support force continues to increase. Next point is resistance, like vice versa. Yes, resistance. Resistance is the level of at which the offer exceeds the demands for a cryptocurrency. The closer the cryptocurrency price approaches the level of resistance, this level, the more sellers want to sell the cryptocurrency or stock or future, and this is impeded by the further growth of the cryptocurrency. Resistance is set at relative maximums of the prices for a certain period of time. In this example, the stock price rises to 7 and the falls to 5. If the stock price returns again to the level of 5, you can consider this level as a resistance, since in the past the stock or cryptocurrency offered at this price prevented its further growth. But we always have a but. Breakout resistance, the seller didn't have enough strength past a significant level. Its missed resistance level are not always retained, and with increasing pressure from buyers, like this, a breakdown of resistance may breakout of resistance may occur. In this case, the demand exceeds the supply, and the cryptocurrency price is likely to increase as the seller's strength has dried up and the demand level continues to increase. For instance, two charts of Bitcoin. It's a daily chart and this 15-minute charts. It's I can say this example for intraday trading. Yes, some support, some resistance, and some channel, and in 2018 we have two main points. It's support 6,000, maybe 6,500, and resistance near the 12,000, maybe 11,800 and 900. Yes, of course, we are near the support, and I think we fallen down within maybe a few hours, maybe a few days. But it's a good example for support and resistance on daily chart and intraday chart. So moving to the next technical pattern, uptrend. It's painting example, and this is an example for daily chart or for Bitcoin 2017. Yes, you know this year. It's the end of the 2017. So an upward or bullish trend, this example, bullish trend, is a situation where the price for a certain period of time sets new highs, some new highs, which allows us to conclude that a high level of demand is moving up the price of the cryptocurrency. The trend line can be drawn at 2 or more points, like this. To do this, you need to combine several consecutive rising cryptocurrency lows. In an uptrend, demand increases with each subsequent test of the support level as new buyers enter the shares. For maybe for this example, this and this. In the end of the 2017, it was very easy. I believe that whenever you're buying, yes, you're always growing. It's a magnificent month. But, of course, we have a but. While the stock is held above the level of support for the uptrend, it is believed that the cryptocurrency remains bullish and a high level of demand. If the cryptocurrency goes below the level of trend support, there is a high probability that the trend movement is over and the price may start to move in the opposite direction, since there is no necessary level of demand for setting new price high. It's first bell and at the start of 2018 this level. But I think if as we had near 20,000, I think it's a good price for closed all your position for cryptocurrency in the end of the year. But it's a history. Next, how you guessed, it's downtrend. Now we're in downtrend. So downtrend, the downtrend or bearish trend is a situation where the price for a certain period of time sets new lows, which allows to make a conclusion about the high level of the offer, which moves the cryptocurrency price downwards. For Bitcoin, it's the end of 2018. in the start of 2018, we we are in downtrend now. Yes, but I think, and I believe that many traders and investors believe that once in the near future we broke this line and go up. So while the cryptocurrency is held below the resistance level of the downtrend, it's believed that the cryptocurrency remains bearish and high level of supply. If the cryptocurrency goes below the resistance level of the trend, there is a high probability that the trend movement is over and the price can start moving in the opposite direction, since there is no necessary level of supply to establish new price lows. Months ago, yes, we have this situation. This is 6,000, and we could grow for 12,000. It's 100%. The next important thing for cryptocurrency trading, it's work with breakouts. So breakouts as a rule is understood as the output of the price for next extremes, minimum or maximum high or low, or for the level of support or resistance. Usually it's accompanied by a powerful impulse, like this situation. Or if we look for some stocks on NASDAQ, it's a good example. One and good example, this price between 4 and 5. Again, it's very important to cut losses from false breakouts and to keep breakouts that turn into the movement. In this case, will be okay, but for example, if you open position for this area, you could close your position immediately because it's a false breakout. This false breakout, yes, maybe this false breakout, but you was able to earn money for this situation. Phases of formation of breakouts. It's three main formations. So first, strong price movement accompanied by an increase in volume, like this, like this. Yes, in this case not a big volume, but it's higher than previous days. Maybe some consolidations. Levels of support and resistance are formed on the stock chart, like this zone, this. Maybe I think it's, yes, it's some consolidation. And third, breakout with a splash in volume. Yes, if we have breakout with volume, I think it's very strange, and maybe it's a false breakout. So let me draw some examples for this three phases. For example, consolidation. Yes, we have some move and some high, maybe some important levels, and in this case some consolidation, maybe we will go down, or we will have some breakout, but this is consolidation, like blue line. Ideally, when we have nice breakout, yes, some resistance maybe, and so one day we have some breakout. It's this situation accompanied by big volume, splashed of volume. Yes, maybe all this time we have not good volume. Maybe this, and this case we have big volume, some, and volume is going up and the price going up. If not, we maybe probably I think we can this situation like breakout and price goes down, and in this case we need immediately go out from position for minimum losses. So moving to the next point, it's work with rebounds. So for this style you need the clear borders which are defined on the daily chart at least 2 days of the accumulation zone. Some maybe like this zone, yes, this zone. It's very important not to work it against a strong weak market. So in these cases, these days, this style is not working. I think it's a big probability that you lose money. It's not recommended to work from the level on the news day. If we have a big news for some cryptocurrency of some stocks, not work with against the news. For example, if you have some good news and price goes high, yes, some stopping could be only little stop and price goes up. So don't short this situation because it's a very dangerous. Best of all, not trade on this situation or buy this cryptocurrency or this stock with very small risk to continue the situation. You have more chance if we buy the situation or then you short the situation, and vice versa situation. It's bad news and some stopping. So don't rush to catch falling knives in this situation because it's very dangerous. I lost a lot of money in my first 6 months trading because I catch these knives, and this situation, it's a lot of situation when I lose money because price goes down. Okay, and it's first one, a neutral market as an advantage for this style. When its market is quiet, it's quite silent maybe, yes, like these days or these days, you can trade some channels, yes, for example above this station. Yes, you can buy and sold your position near with the near resistance, or if you have opportunity to short the cryptocurrency, you can cover your short near the support. So at the end, it's important to work in the zone of action and stay idle when we are not there. That I said on our first meet with me and Alice, when I said that if you don't have a situation for trade, don't trade. It's very important because you always come up with an opportunity to open a trade, but this will not be your script. It's a very dangerous situation. So zone of action, it's what this means. It's the price area where we expect a combination of certain factors with an acceptable risk. For example, in this situation, yes, if we buy in this situation, if we short the Bitcoin, again buy, if we buy the stock AMPE, if we short Bitcoin, if we have a short for your exchange. Also, I want to say that there are a lot of indicators in the technical analysis, such as Elliott waves, Fibonacci, moving average, and many others. I mostly use only moving average, but at our lessons we will talk about all these indicators in our future lessons. So please leave your question in the comments. We will see each other on Friday, and our topic will be very interesting. It's risk and money management and cryptocurrency and stock markets. So guys, see you soon.